Don't ever make the mistake of believing that market success has to come to you fast. Trade small, stay in the game, persist, and eventually, you'll reach a satisfying level of proficiency. Written by E.G., author of Paradigm Shift, How to Cultivate Equanimity in the Face of Market Uncertainty. Leverage is a two-edged sword. I believe that by now you must have come across this statement. If not, let me be the first to tell you that the statement is true, and you will do yourself a great deal of favor by taking time to let this truth sink in. Most of the new traders coming to the market often overlook risk management. Well, you might be asking, what is risk management and how is this related to leverage? You know too well that Forex trading is a high-risk investment. Having said that, for you to survive in this high-risk venture, you must devise a plan to manage your risk. Over-leveraging a trading account is a good example of poor risk management. Take note, when you over-leverage your trading account, you expose yourself to the temptation of over-trading, which will no doubt lead to a very short-lived trading career. If you are unsure of what leverage is, how to use it, when to use it, and how much is safe for you, then worry not. In this ultimate guide to understanding leverage, I will try as far as possible to answer these pertinent questions. This guide covers the following sections. What is leverage in Forex trading? How does leverage work in Forex trading? Practical Forex leverage examples. How to calculate leverage in Forex. What is the best leverage to trade Forex? Relationship between leverage and margin call. So, let's jump right in. What is leverage in Forex trading? In Forex trading, your broker will require you to deposit some money to your trading account, margin, and then depending on the leverage you have chosen, your broker will loan you the amount that is equivalent to the margin chosen. How does leverage work in Forex trading? As per the definition of the term leverage, which I have presented above, you can see that leverage is meant to increase the lot size that you can trade. This means that you get to deposit a relatively low amount and then get the power to trade a relatively larger size. Without leverage, most retail traders would not be able to afford trading in the Forex market. Remember, I had mentioned that leverage is akin to a double-edged sword. What does this mean? Well, a double-edged sword can do you harm if not. For you to be able to trade $100,000 of currency, with a margin of 1%, you will have to deposit $1,000 into your margin account. Another important point to remember, margin is a good faith deposit that you deposit with the broker so that you can trade. The broker can then loan you an additional amount, which we call leverage. The broker can then loan you an additional amount, which we call leverage. The leverage provided on a trade like this is 100 to 1. Forex traders enjoy higher leverage provision compared to their counterparts trading equities and futures. For equities, most brokers offer a leverage of 2 to 1, while for futures the leverage stands at 15 to 1. Perhaps you're asking, why the big difference in leverage across the three markets? The answer is volatility and fluctuations. Equities and futures fluctuate with Y. We have some high leverage brokers giving leverage of between 500 to 1 to 3,000 to 1. Clearly, you must understand that this is a ploy meant to attract you to open an account with them. But wait, leverage is not that bad. On the hands of a professional trader, leverage can be a deadly weapon which he can use to slay the broker. But remember, the brokers are as deadly as the White Walkers in the Game of Thrones, so don't be too cocky with leverage lets you end up being slain. Since the loan, leverage, is collateralized by the cash in your margin account, the money that your broker loans you does not come free. Assuming that both trader A and trader B start with an account size of $10,000 with leverage of 50 to 1 and 5 to 1 respectively, then the calculation of their loss in equity will be as shown below. Trader A, using a ration of 50 to 1 means that the investor can enter a trade of $50 for every $1. According to the graph above, you can see that the lower the leverage, the higher the winning percentage. If you are planning on joining the group comprising winning traders, then you should consider settling for leverage that is the neighborhood of 5 to 1 or less. Relationship between leverage and margin call. As I have pointed out above, Leverage is a loan that is given to you by the broker, allowing you to trade bigger position than the margin you have deposited. There is a margin requirement that is normally set by the broker. This margin requirement is what sustains your active trades. You follow? Good. Now, in any case your active trades are in losses and that the losses accumulate beyond the margin requirement, your broker will initiate a margin call, which is an instruction from the broker asking you, the investor, to add money to your account to meet the margin requirement. What happens if you don't heed the call? If you fail to heed the call, the broker is obligated to close your open positions so as to preserve the broker's capital that was loaned to you as leverage. Therefore, when thinking of how leverage relates to margin call, think of it in these terms. A margin call is issued by the broker to protect the leverage extended to you. Conclusion: in this article, I have endeavored to explain what leverage is and how you can use it to grow your trading account. A few take-home points worth remembering. Leverage is a double-edged sword. Handle it with care. Low leverage is highly advisable because research has shown that investors who use low leverage of 5-to-1 have the highest winning percentage. Leverage is borrowed money that is charged interest by the broker. Don't be too quick to take the high leverage offered by some brokers. The brokers will always protect their interests, meaning that in case your trades are in losses beyond the margin requirement, the broker can issue a margin call. So, don't be in a hurry to blow your account by going for high leverage. Raise sufficient margin, then apply for moderate margin, which will be determined by your skill level and the calculations presented above. By so doing, you will increase the odds of